To hear this entire episode of American Viewpoints with Mike Ferguson, head over to mikefergusonmedia.simplecast.com. The link will be in the video description below.
But here's one of the things that's even more unique, and I think this should get a lot of attention because it's not just about increasing taxes, it's about government starting to tax us in a different way. One of the proposals is to tax what some people are calling unrealized gains. In other words, you have some investments, they're just investments, you haven't taken income off them, you haven't cashed them in. They want to tax some of the value of what you've got if you're in a certain wealth bracket. A wealth tax. Is that really what we're talking about? Joined now by Rick Manning from Americans for Limited Government. Rick, when you saw the proposal, I mean, we're talking trillions of dollars again in spending. At least this time, they're not trying to tell us it's not a tax increase. There are tax increases. They just say it's on those really rich people. And like you just heard the president say, pay your fair share. But I want to start with this idea of a wealth tax. Am I reading this right? That you have so much money in assets, we're just going to take those assets as a wealth tax.
Yeah, you are reading that right. The term unrealized gains means, I'll just do it in very simple terms. It's obviously bigger numbers than this, and that may not apply to real estate, but I'm going to use real estate because most people can understand it. You have a home. You live in that home. The home appreciates in value. Let's say you bought the home for $100,000 10 years ago. It's worth $200,000 now, hypothetically. You have an unrealized gain of $100,000. Under this, that unrealized gain, assuming it was applying to everybody across the board, that unrealized gain would give you a tax liability of $20,000. You didn't get $20,000. You didn't have $20,000 of income flow into your pockets. You didn't ever see that $20,000. You merely had a gain, a paper gain of the value of your home. And yet the federal government would come to you and say, well, good news, you've got a more valuable asset. And so we're going to come and we're going to say to you, pay us $20,000, pay us 20% of that asset's value. And you're going to say, I don't have $20,000. I didn't make $20,000. What are you talking about? And that is what they're doing. Now you escalate that up to somebody who's making, a lot more money. And suddenly you say, why would they keep their money into assets that are subject to unrealized gains? Because the fact is, this will push your purchases by the wealthy to stocks, to corporations that are not on the exchanges, because those are unrealized gains that's really hard to figure out what they are, into real estate. And guess what? If they push into real estate, the cost of housing goes way up, because suddenly all the wealthy people are buying all the real estate because that's where they're not going to be taxed. So the reality of this is they're going to, this idea is, we don't care if you actually made money in your pocket. If you made money on paper, if the accountant says you made money, we're going to tax you on the money that the accountant says you made, whether or not you have the cash to pay it or not.
Rick, is there any worry that if this concept is actually adopted, so because you have this amount of assets, stocks, bonds, CDs, whatever it is, because you have this much, we're just going to take some of that. What are some of the, I guess, possible unintended consequences? They're arguing right now that this is only for homes worth over $100 million, so it's easy to not care about that. But could this be a foot in the door to including wealth taxes and other tax brackets?
The U.S. income tax, when it was started in 1913 by constitutional amendment, put a 7% tax on anybody who made more than in today's dollars, $14.5 million that year. And so is every dollar above $14.5 million. If you make 14.5 today, just think about it. If you're making less than $14.5 million, are you paying taxes?
I would think so.
The answer is you are. And as a result, so yeah, that's what happens with tax policy. Very rapidly, when you discover you've got a large pot of money that you can tax, the only way you make that tax revenue grow is by including more people into the system. And so yes, the minute they get away with the idea of we're taxing unrealized gains. Once again, money you never received in your bank account. The minute they get away with that, you can expect Uncle Sam to be looking into your unrealized gains to try to tap the real wealth in this country. Because the real wealth in this country isn't with the very wealthy. It's because there's so many people in the middle class and upper middle class. That's where the real wealth is. Because I'd rather get $1 from 1,000 people than $100 from one person.